Okay, welcome back guys. So in this video I'm going to be showing you a quick tutorial on how I trade, and sorry for not recording this on my PC because actually it had an issue. It broke down, so I couldn't do it on the PC. That's why I'm recording this on my device. So the first thing you need to do is to make sure you have downloaded TradingView and download any trading platform, whether you're a crypto trader, forex trader. Just download any platform which you trade. Personally, for me, I do trade crypto, but I majorly trade forex. I trade on forex majorly than crypto. So if you open up the chart, you select any pair, search for any pair which you want to trade. In our own case, we are trading optimism, so we have to identify the trend of the market. You are going to select your tool. To select your tool, you just have to click on the pencil icon. This is a beginner's video, so click on the pencil icon. You can scroll through all the tools, and anyone which you need, just press and hold on it and start them so that they will be added to your favorite. And if you select the pencil tool icon, you can click on show on chart so that the thing can show up on your chart like this. Having understood that, now let's go straight to the analysis on how to do your analysis. Firstly, I'm going to be starting with trend line. So I have to identify the trend of the market. This is the current trend of the market. The market is moving on a downtrend. Merely looking at the market, you notice that the price is going down, so the market is moving on a downtrend. The price is going down, and something which you should take note of if you want to make more money and less losses in trading is to focus on one trading strategy. For me personally, I work with the W structure formation, and how the W structure formation works is something similar to this. If the left leg is lower than the right leg, it means that the coin or the pair which you are trading will pump heavily, breaking the two highs, that's the two all-time highs, the previous highs. But if by any means the left leg of the W structure is higher than the right leg, that means that the coin or the pair which you are trading is likely to reverse from the neckline. The tip of the W structure is known as the neckline. That's this point. They are being known as the neckline, or it's going to reverse at the order block at this level. So this is what's likely going to happen, something like this. So having understood that, make sure to take note of that because that is very essential on this class which we are having right now. So as I have identified the trend of the market, all I have to do now is to identify the key points, the highs and the lows. But before that, we have to identify the break of structure. Since the market is moving on a downtrend, the break of structure should be from the previous high which was created. You can see, and for those who don't understand break of structure means is the time or the point from which the market moves from its previous position to create a new high or a new low. Now, what the market did here, it created a new low here at this point. It's created a low at this point. But after creating the low, you notice something. Price broke through the low and created a high here. This high which was created here created another break of structure to the lower side. But some people on a downtrend, I'm telling you this because this is how you identify it on an uptrend, but I will show you a practical example. On a downtrend, we identify break of structure at the bottom of the candlesticks. So this is it. This is the break of structure on a downtrend. On an uptrend, we identify it at the top. On a downtrend, you identify it at the bottom. So you can see that price broke from this point and this is a low. Just note that this is a low. This was the lowest point which the price went before it created a new high. Then it broke through that low to create another lower point. So you can see that means this is the break of structure. So in order to identify that, we have to tap on it and select this tool, click on settings, and then just type in BOS. But if you are on a vertical mode, this should be very much easy. So let's click on POS. We have identified that as the break of structure. And for those who are asking and looking to know how to identify it on an uptrend, let me go ahead and show you an example. I don't think that's okay. I'll try my best to show you an example. Okay, you can see at this point the price broke through. It created a new high here, though this is little, but I think it will be worth it. It's created a high here, but price broke through to create another high. Then it broke through this previous high to create another high. These are just break of structure, but in this video I don't want to dive deep into break of structure and how to use them, because the major point which you will need break of structure is when using inducement, and that will be a lesson for another day, because that's another strategy which I use. So identifying the two breaks of structure on this zone, all I have to do is to note the order blocks. Another thing to understand is some people call order block supply or demand zones, because they do appear on supply and demand zones, and they are very crucial in your trading, because if you misstep on how you use them, you are actually going to take an L on the trade which you are taking. So order block is the point at which the market moves from a point to another point, either from a higher point to a lower point, or from a lower point to a higher point, and it's been identified by a strong momentum, just as you can see here. Without just saying this thing, you should be able to see it, because there was a strong momentum here. This is an order block. This is an order block, the candle which started the strong momentum. So this is an order block. This is also an order block. This is also an order block. So we are going to identify these two order blocks. Though you can also identify this as a minor order block, but no matter how minor it is, every order block do matter. So you can either take profits here, or at this point, these are just market manipulations, and price might likely reverse from this point, or it might reverse from the top one, but you never can tell. So having understood that, remember I told you guys on how to use W structure. If the left leg is higher or lower than the right leg, it means that the price will reverse from the price is going to go exceedingly up. But if the left leg is higher than the right leg, it means that the price will reverse from the neckline. And now let's put this into our analysis. You can see that at this point the price moved from here to this order block, created a new one, and moved all the way to this level. So it broke structure. Remember, this is the break of structure. It broke structure to create a new low. So merely looking at this, which one do you think is likely forming? It was forming this one. It is forming this one. So price is likely going to break to create a new high. But also take note that, because this is where it becomes very interesting and very important, price can create miniature order blocks inside order blocks. And before we just get to that, if you want to place your entry should be placed at the order block. The price might touch the wick of the order block. What I mean by the wick of the order block, this tiny point which you see here, you know that the candle, this is the tiny point of the candlestick which you see, and this is the body of the candlestick. This big part is the body of the candlestick, and this tiny place is known as the wick. That's what we call it in trading. So on this place we can identify our entry at this point. This should be your entry. So but before you enter, make sure you enter with confirmation. In as much as price has broken this, so price is likely going to form something similar to this. Price is likely going to form something similar to this. From here it broke structure, then reversed to this point. You can see that it's created another mini double structure here, and this should kickstart our entry. So Let's just see how that plays out before we enter, because we need to enter with confirmation. Now you can see this is the confirmation which you need to enter on this trade. So once I've seen this type of thing, because price should reverse either from the body of the candlestick or from the wick, and you can see how price reversed without breaking this low. It's reversed. But if I'm to enter, I'm not going to enter until I see a strong momentum, a bullish engulfing. A bullish engulfing simply means a candlestick engulfing another candlestick, like what happened here is known as an engulfing. This is a simple example of an engulfing. You can see that the bullish candle was being engulfed by the bearish candle. Then another bullish candle engulfed the bearish candle. So I want to see something like this. But in this point, I want to see the bullish candle being more strong than the bearish candle, like what happened here, before I enter, because that will show me my confirmation. Remember, our entry strategy is using the W structure, and we are entering on the order block. And also remember that price travels from order block to order block. We had identified that these 2 points, this is an order block, this is an order block, this is also an order block, this is also an order block. And another funny thing to note is that any point at which price reverses is just easily an order block. So I can mark out this point as an order block. If I'm looking to enter, I can mark out, since price rejected on this order block, I can mark out this as my next point of entry. Placed my long position at this point. Then my take profit should be at this order block. That's my first take profit. But though I don't think this order block will be valid, so let me go ahead and remove it. Though price might respect it and behave, do some silly movements, something similar to this. It might have some major consolidation at this zone before it touches this our main order block. So that should be our main order block to exit the trade. So my take profit should be placed at this zone. This is the order block, so it should place at this zone. Let me go ahead and expand that. So let's see how this plays out. You can see price has tapped into our zone, and let's see what price did. Now take note of what happened here. This is why it's very interesting to understand the concept of order blocks. Like I told you guys, that I'm not going to respect this order block because price will eventually break it. Yes, that's eventually going to happen, because I know that it is not a major order block, but every order block do matter. Now you can see how price rejected. Make sure when you are drawing an order block, you have to draw it from the week to the next week. And you can see how price tapped into the order block and reversed. Now let's see what happened next. You can see what happened. Let's go ahead and spread this thing a little bit more. See, price consolidated at the point of our entry. It tapped into the order block again and it's reversed. It keeps on rejecting at this order block zone, but eventually it should break it. Now you can see it. Our take profit has been smashed. Easy peasy. This is a simple strategy which you can use to trade and make a whole lot of money, other than those who keep using every strategy, because the more strategy you use, the more you are likely to lose a lot of money. That's why I keep telling everyone that I teach on how to trade. Make sure to understand the concept of order block. If you understand order block, even if it is the only strategy you use, you are going to make a lot of money, in as much as sometimes the profit might not be much, but you'll be more profitable than the person using every other strategy. Trust me, I've tried it and it pretty much works. Now, because I've told you guys, I'm going to show you, as we continue, I'm going to show you a bullish example of a break of structure. Now you can see that price broke from this structure, price tapped into this order block and reversed to this level. Then price broke through to create a new high, But notice this. Yes, this is a break of structure. We are going to identify the wick as the break of structure. But if you look at the one following it, the one closely behind it, this is also a wick, and this is close to this break of structure. That means this break of structure following it is not valid. So we are likely to see price reversing from this point as it has tapped into this other block. We are likely to see price not respecting this other block, because remember, other block is the point at which the price shows a strong momentum to change, to move to the next direction. So this is an order block. No, this is not the tool I should be using. This is an order block. This is an order block. But as someone who has been long in trading, I've already understood the concept of break of structures. This is why break of structure is important, and this is a strategy inducement traders do use to trade. If I'm to enter on this trade, I'm not going to use this as a valid break of structure. This will be my valid break of structure. So I should see price tapping into either breaking this zone and tapping into, let's say here, price should tap into this zone before it pushes off. But inducement entries can be sometimes confusing because there can be a lot of manipulations where price can just come and tap into, it will not even tap into this zone, you just tap into the head and start pushing up. That is why you have to make sure that even if the remaining thing for the price to tap into your zone is just a little gap and it starts moving in the next direction, do not enter on the trade, because those are just minor manipulations which can reverse the trade against you and make the price to reverse against you, then tapping into your zone next before taking off. At that point, it must have liquidated you before it starts taking off. So having understood this, let's see what price happens to do next. We have already gotten our first take profit, but if we were to set our entries at our take profit at this point, at this order block, you will see that our first take profit was matched. Let's say that we are two individuals and the first person got this entry. Now the second person, for him to get this entry, has to notice the order block. I've already identified it. You can see that here is another block, and you can see how price tapped into this zone before it moved to the next level. That is how important order blocks are. So assuming the person obeyed the rule of order blocks and placed his entry at this level, then targeted the next order block following it, because this order block has already been respected. He's not going to respect it again. He's going to respect the next order block following it. So his take profit should be to the next order block. You can see that he has made another money. He has made another profit. But if you entered either of the ways, you will still be in profit and your trade will be very, very successful. What I suggest you do is to do this strategy which I just showed you instead. Make sure to backtest it and see how it works for you before you start using it. And make sure you take your profit, at least 50% of your profit at the first order block, or you close your positions at the first order block, because there might be manipulations along the line which will cause the price, instead of going to that direction, to break through to the downside. Now, having understood that, remember I told you guys that yes, this order block has been respected. You can see that. So price is likely going to respect this order block before it takes off again. But let's see what happens. To either respect this order block or this order block. And remember I told you guys that this break of structure is not validated, so I'm not going to respect it. Though the breakout, the momentum was strong, so it was valid, but the follow up shows that it's not valid. Though I know that the price will tap into this zone and it will reverse. It's likely to reverse at this zone. But on the second hand, if there are just minor manipulation, it might tap into this zone. But why I don't think it's going to tap into this zone is because this zone has already been respected by this zone, even though that this break of structure wasn't broken by this. So let's see what actually happens next. Can see how price rejected, and you can see the manipulation I'm talking about. You can see how price broke through to tap into the previous high. And remember, I told you guys, price can either reverse at the wick of the order block, or it can reverse at the body of the order block. Now if we are using the body, we could have made more money, but you can see it tapped into the body of the order block and then reversed. But let's say, for example, price happens to respect the wick. The person who was aiming for the body will end up in losses. That's why I advise you to use the wick as your exit or your entry strategies. Let's see what happens. The zone which it taps into before it moves up again. Now you can see what happens. You can see that price actually tapped into this order block and moves up. Now you can see by yourself that this is the simple concept of order blocks, and it is very, very, very effective. Now let me take you over to the next concept of FVG or IMB. That's fair value gap or imbalance. Fair value gap or imbalance is just the gap. Let me go ahead and delete this too. It's just a gap which is being created as a result of a strong momentum. Let's say that these are candlesticks. Let me draw some candlesticks. These are candlesticks. Let's say the market is on an uptrend or a downtrend. I'll show you also a live example on a chart. Let's say that the market is on a downtrend. Let me draw another candle showing the market on an uptrend. You see the concept of imbalance. Now, if these are candlesticks, you know that candles do have this type of wicks. That's this strong, the tiny point which comes out of them. Now, if this wick did meet up with the previous candle, you can see that if we are to measure them now, both of them did meet up. That means there is no imbalance being created here, because they both, the wick of this candlestick and the wick of this candlestick did meet up. But if by any means the wick of this candlestick, let's go ahead and draw this one. If by any means the wick of this candlestick did not meet up with this, let me shift this a little bit. Okay, let's draw that again. Let's draw that again. So let's say instead of it meeting up, it just created something like this. Something like this just happened. Or even if it created another wick, as far as this wick did not meet up with this, it is known as an imbalance. But let me go ahead and remove this so there will be more space. This gap created here, if you check from the spacing between this wick and this the third candle which formed after the previous one, the spacing is known as a fair value gap or imbalance. Now this is why a fair value gap or imbalance concept is very, very essential. Understanding fair value gap or imbalances, you will know that no matter what happens, if a fair value gap or imbalance is being created, price must come back to fill it up, because those are mistakes. I don't know if I'm going to call it mistakes. They are just imbalances that happens as a result of a strong momentum, either in a selling market or in a buying market. Now look at this thing. Let me show you this on a real life chart. You can see that the wick of this candle, this is the wick of this candle, did not meet up with the wick of the third candle, because fair value gap do happen between three candles. Did not meet up with the wick of this candle. I'm showing you this on a bearish scenario, so it did not meet up with this. So a gap was created here. A gap was created here. Now what do you see? When price tapped into this order block, it smashed through the gap to fill it up. Now you can see that the concept of fair value gaps and every strategy which I've just showed you guys in this video works perfectly. You can also see it on a bullish scenario. Let me show you that. You can see that the wick of this candlestick stopped at this point, and the third candle following it, this is the wick. That means there was a fair value gap created here. But don't use fair value gap as entries or exits. Instead, use other blocks, because price travels from order block to order block, or you can say price travels from supply to demand, even though they two mean different things, but they work in similar way, because sometimes supply and demand, if you are using that strategy, you are not going to be profitable, because sometimes price might break through the supply and demand zones. That is where other concepts in trading comes to play. So you can see that a gap was created here, and price actually broke through the gap to fill it up, then tapped into the order block to move to the next order block. So at this level, you have already understood the concept of trend lines, which was the concept which we started with: the break of structure, the order block, the IMB or FVG, that's fair value gap or imbalance, that's what we call it. Now you can see how back the price filled up this week, so let's go ahead and delete all that. Also, looking closely at this point, you can see and you can notice for sure that the market is changing its concept. So this is likely going to be, since this break of structure happened, you are likely going to see a break to the upside, something like this, to create an upside. That is what we should see if the market is on an uptrend. But if you look very well, you will see that the market haven't yet broken this main high. So we are likely still on a downtrend, in as much as the present condition of the market shows that the markets might be looking bullish, but we are still on a bearish market. So price might likely just tap into this order block. It might just tap into this order block. Let me select that accurately. Might just tap into this order block and start tanking. So let's see how that plays. Exactly what will happen. Price will tap into the order block and start going down. Exactly what will happen. It will not break through the order block. It will start going down, it's suddenly breaking these two lows, going all the way down. I'm going to tell you guys why price is actually going to do that, and you can see that's just happened, and that is the current point of the market currently. Now that's the current position of the market, and I'm going to show you why price did that. Remember, I told you guys our strategy and the strategy we are using, and the strategy to become a profitable trader very fast is to use the double structure strategy. And what did I tell you about that? If the market forms a double structure and this one is higher than the right leg, is higher or lower than the left leg, it means the market is going to be bullish, very bullish, breaking the highs. But if by any means it happens to be like this, that means we are going to reverse at the order block, or at the neckline or the order block. The price is going to reverse to the downside, breaking these two highs. That was why price tapped into this order block. So assuming you placed your entry at this zone, with due patience, you will see that price will go to your take profit easily. You can see that price smashed through your take profit. How you set stop loss is just a little bit under the order block. That's how you set stop loss. And you can see on this trade and on this chart, you have just made 3 profits. And if you check the risk to reward ratio, this one is 3 to 51 risk to reward, this one is 3 to 72, this one is 2 to 47. That's a lot of profit. And if you sold at this level, because this is an order block, like I told you guys, since the double structure, if you mark out the lows, it shows that this one is a little bit higher than the left one. That means it's going to break, it's going to reverse at the neckline, it's going to reverse at the order block. And so you should place your entry at this zone, and then target your exit should be the recent low, the recent swing low, and your take profit your stop loss should be a little bit under the order block. Your take profit should be at that low. You target it and your take profits will be smashed. Now looking at this chart, we have already made for profit. And this, even though this is the current part of the chart, we are likely to see price breaking through even to the downside because it has already broken through this order block. There is also an order block here. So this is the current movement of the market. For now, I'm likely going to see something like this. We are likely going to see something like this, price reversing at this point, then tap into this order block, then going up again. But since this is a cryptocurrency, it all depends on the price of Bitcoin. So that if this thing happens to be like this, you just have to understand, use the concept which I just taught you guys today to mark out the zone, and use the order block which was created here as your entry. Just mark out the order block as your entry because price will tap into the order block, and then your entry should be like this. You place your long positions, then your stop loss should be a little bit below the order block, and your take profit should be either at the next order block or it targets the high, dependent on how the W structure is. And if you look closely, this W structure signifies a reversal at the order block, so you have to target the order block. So this should be it. That's if this thing happens as expected like this. Now, and if it happens, that would be 5 profits. So that's it for this video. If you found this video helpful, please don't forget to smash that subscribe button and leave a like on this video because I'll be teaching you guys how to trade and how to become profitable from now henceforth. If you have any questions, feel free to drop them in the comment section and I'm going to see you guys pretty much later. Thank you so much for watching.